Hello to everyone, welcome to our new webinar. It's Monday, March 10th, so hope everyone is doing fine. Let me know if you can see my screen and hear my voice. I got message that we have some error for streaming on X or Twitter if you want. Let me give me just a second to check if everything is fine there, because I know that X had some issues earlier today. Yeah, still seems it's not working something. Anyway, looks like Enes is here, team is here, so if everyone else has joined, make sure to press a like and make sure to subscribe to our YouTube channel so that you will be notified whenever we post a new content. So what's going on? As you know, last week we have seen a pretty nice sell-off on US dollar. But before we go to the US dollar, maybe it's not a bad idea to look at treasuries. As you know, we are seeing a pretty nice and strong reversal here on treasuries, and I think that the US yields will continue to weaken. We have also a CPI report on Wednesday, which could be one of the important catalysts for further weakness maybe on the US yields. And as you know, this will or should have also the bearish impact on the US dollar as well. Now, when looking here at some of the intraday price action on treasuries, we can basically see that market is a bit sideways here. Okay, so in my opinion, this looks like a wave 4, and I would be expecting a push higher into wave 5. So on the flip side, US yields obviously should then weaken, and this will possibly cause even more weakness on the US dollar. And as you know, dollar index has made a pretty nice and very strong reversal over the last few weeks, and looks like that we are in the middle of this impulsive sell-off. Now, if we look at the dollar index wave count, I'm still anticipating that this year we will fall below 100 level, and of course there can be some pullbacks in the meantime. Keep in mind that dollar index basically reversed, back to these November levels, okay, from 2024. That was Trump level, so Trump won the US elections back then. We have seen this Trump trade all across different markets, but now these markets are making a full reversal. So looks like that there can be maybe some support in the near term here around 103. Possibly we will see a bit more sideways price action going into the US inflation data this Wednesday. There are no major releases for today, and basically when looking at this wave structure, because that was a pretty nice and strong extended leg to the downside, definitely I think that's a wave 3 of an impulsive sell-off. But the next rally, whenever this one will show up, it will be opportunity to actually to join this downtrend, because we know that if that was a very strong sell-off as a wave 3, then more weakness should definitely occur after some rally here. Invalidation level is very well defined. It's at 105.70. So as long as we are below that level, I think that the dollar will remain bearish here. Of course, because we are at this level, maybe not the best place to look for potential shorts, but if we see some solid rebound in the next few sessions, I think that would be much more appropriate to look for opportunities. And maybe, as I said, there will be a new catalyst for a break to the downside, the US inflation report on Wednesday, which I will also cover it in a bit. Now, one of the main reasons why we have seen a very strong push to the upside on the euro are obviously differentials between US yields and bonds, and you can see that yields in Germany are making a very sharp move to the upside, while here we are just basically very slow on the US yields. So if you add euro dollar, you can basically see here that the euro dollar has made a very nice, explosive, strong move to the upside. So as long we have this relationship between and spread between US yields and yields in Germany, I just think that of course euro dollar will stay in this recovery. So definitely it's worth to keep an eye on this one. This spread differential, it really can help us to identify in which direction we are moving, and of course if the current bull run for the euro is for real or is just a temporary impact. But because we have this pretty strong gap here, I just think that euro dollar is going to stay in this recovery mode. Now when it comes to euro itself, you can see that we had a very nice strong push to the upside. We are basically back in this midpoint from that was back from the range from 2023 to 2024. So we are back in these levels. So it's just another confirmation that we basically completed this corrective decline from 2023 highs at the 61.8%, and that we are in an uptrend. So again, maybe some resistance is not that far away. 109 could be the next important swing, but as I said, on the dollar index, whenever we get some retracement, I think that there would be opportunity to join this trend. Now, to identify the potential first support levels, maybe you can help yourself by using this wave tool length and then just projected it from the recent highs, and whenever we will make the similar pullback in this way forward, that could be the first support. But above that you have already maybe the 23.6, which could be important because this leg is pretty strong and extended, and maybe not even we will see the 38.2%. But as I said, whenever we see this some corrective setback, I just think that more opportunities will show up here within this impulsive strength. Also, if we take a look at some other currencies like dollar, Swiss franc, this one has made a pretty nice push to the upside here recently, but it didn't touch these swing highs, so it can either be a flat correction and we are headed back to the downside, or possibly even a running triangle if I adjust the wave count a little bit. But in both cases, it looks like that we are in a bear trend here, and I think that even dollar Swiss franc is now ready to resume to the downside. What I would be watching maybe for some supports here again is around 0.8720, maybe then 0.8650 is the area for potential stabilization. But same story like we were looking at the euro dollar and dollar index in general. Whenever we get some solid rebound, I think that this will be just a correction within this downtrend. Also, looking at dollar yen, this one keeps moving to the downside. As you know, I had some different wave count a few weeks back, but still with a different wave count we were expecting weakness to at least towards 148 area. But now, because this one firstly has been retested as a support here at the end of February, then we got rebound, and now because we are breaking down quite significantly, I just think that here dollar yen could be trading in wave C. Now it could be part of ongoing triangle, meaning that we could bottom in the next few weeks at the lower side of the range, or possibly this is wave C headed even back to this September swing lows from 2024. And we know that if Japan will continue to look for higher rates, and in the flip side, if Fed will remain dovish, which is widely expected, because even Powell himself said last week that there's some uncertainty because of Trump tariffs. We are seeing stocks market pulling to the downside, so I'm not sure what should happen for US yields to turn to the upside. Most likely they will be again on hold the next meeting, but I think that still this year they will be looking for more cuts. And if we if inflation data will come lower than expected, then we know that there can be even one step closer towards their decisions to cut rates. So I think that that's also something that drives this pair to the downside, and I would not be surprised if there will be even more weakness here on this one over the next over the course maybe of this year, especially as I said, if this will be maybe start unfolding and looking like an impulse here and breaking some key levels here around 143, then I certainly think that 137, 138 could be here coming in play. Now, earlier I said that maybe some inflation could be the real mover here. What's the most important is that basically crude oil energy prices, as you know, in general, are driving is important factor for inflation, right? So if energy prices will come to the downside, if economic activity somehow is weakening, then of course this should bring down the inflation. And this was a pretty tight, there was a pretty tight correlation, and still it is, between inflation in the US and energy prices. And what's really important so far for this week is now when you will get this report out, by the way, it should be on Wednesday at 1:30 Central European time, because as you know, hour has moved in the US this Sunday. We will move it in 2 weeks. So because energy prices are moving quite significantly to the downside, basically since mid of January, we can expect, okay, I would not be surprised that of course US inflation will also come lower. So I'm not seeing inflation moving to the upside. In fact, I think we will either stay at these levels, but most likely it will start to turn lower once again. And we know what this means for US dollar. Then obviously the US dollar with the US yields should continue to move lower as well. And if we take a look here on a crude oil wave count, maybe we are approaching some of the support here. Okay, it could be a barrier triangle, so maybe we get some rally here for a wave E and then more weakness. But overall, I just think that this year we will see energy breaking these significant support levels, and maybe then even start falling towards below 60, maybe even towards $50. And this is something that can help bring inflation down. Of course, it would be very concerning if crude oil energy prices will come to the downside because of less demand. Okay, then this would be a different story if economic activity will keep moving, will keep weakening. But for this week, what is really important, as I said, is that energy prices have been weakening since mid of January, and that we are expecting inflation to also to move lower. So if the inflation data will confirm this, then of course we can expect that the US yields will also move to the downside, and this will keep dollar in bear trend. Okay, now if the US yields will obviously continue to move lower, then maybe we can expect that gold itself could see another push, at least another push to the upside. And I would not be surprised if we are going to see a levels around 2950 this week, because even if I think that there can be still ongoing consolidation here for this wave 4, I just have to respect what's going on a smaller time frame. And if you will zoom this in a little bit, or maybe go to the 1 hour time frame, you can basically see that we have a pretty strong recovery here from February lows, and now basically we are sideways. So I just think that this looks like a very nice correction. More complex it becomes, more powerful can be the break to the upside. Okay, because whenever prices are moving sideways and makes plenty of failure breakouts at the highs and at the lows, a lot of traders will be liquidated. Okay, and then at some point those traders will give up on this potential break to the upside, but that will be the perfect spot or time basically then for this market to really start moving higher. So watch out gold. I think that there is a very nice support around 2885. Unless that's some kind of a triangle in a wave B, then these supports will not be touched, obviously. But if we see a move into this area, I think it could be quite attractive to look for potential opportunities on the upside, which in my opinion could be really interesting as long as the market is trading above this invalidation level. And who knows, maybe I'm wrong, and maybe this will not be a break to the upside for a wave C of potential wave B that belongs to some kind of a irregular formation. Could be maybe even wave 3 break to the upside. Okay, we will see how this will unfold, but so far what I see, at least on the smaller time frame, this gives me confidence that we could see at least one more push to the upside, and then we will try to identify the correct outlook later, whether this is really a wave 3 or wave C. Okay, but at least in the short term, direction in my opinion is the same. So watch this support box down there. I think it can be quite interesting. Now let me just check something here, my notes. Okay, now do you think we entered bear market for Nasdaq and crypto? Well, basically we think that, obviously not we think, but we are seeing that stock market is in a consolidation, is in a correction. We definitely are experiencing pretty strong sell-off, but that's totally normal for stock market. And if this still looks like a solid correction for potential completion of a flat pattern here in a wave 4, of course we know and we understand that the cryptocurrency is much more volatile, and that's why we are seeing much bigger pullbacks there. But at this point, to turn bearish here, okay, would in my opinion be, it would not be appropriate level, because we are trading at very important key support level. And I have been highlighting back in January that these Trump levels here from November around 5,670 should be very interesting and important. So maybe that's not going to be wave 4, maybe that's already the end of a wave 5, but still you may see some kind of recovery for a wave B. So I'm thinking that we could stabilize on stock. Maybe there will be some actions taken by Fed, who knows. They will try to support the prices by highlighting the potential cuts that could come sooner if inflation will move them into this direction, and this will help maybe stock markets to stabilize. But I certainly would not be surprised if we are approaching some support. We can also see some interesting volatility here, okay, and also if we compare it to the previous examples, and maybe that's the stage where I can already see that there is a lot of fear involved, which obviously makes sense after this very strong drop, but that's, at least technically speaking, that's some kind of a zone from where we could see maybe a reversal. Not today, not tomorrow, maybe, as I said, on Wednesday could be the interesting and important time. So if I'm wrong, and let's say that price would continue straight to the downside towards 5,500, then as I said, I would most likely adjust the wave count, and I would be expecting still this to be then, let me just label this to be then wave A, wave B, and then would be start tracking deeper correction in 3 waves. Okay, but I still don't believe that this is some kind of a major multi-year top. There will be always new buyers next day, especially institutions, and we know how the stock market functions, and that stock market is basically in a recovery mode because of GDP, historically speaking. But of course, if there will be some still very weak data coming through, there will be more recession risk, and of course this could help, this could send the prices much lower into a deeper pullback. But if the price action itself will at any point allow me to label the pullback on stocks as a correction, of course I will do it in this way, no doubt. Now looking also here on VIX, known as fear index, this one also is coming into some interesting levels here. I think that 30 is quite important. We have seen spike into this zone quite often here through 2021, 2022, and if once again we reach these levels, then we know in what kind of a stage, in which stage of this current cycle we basically are positioned. But when it comes to to potential trading opportunities here on the stock market, of course, what you would have to see is a rebound in impulsive fashion, okay? Because right now we still have lower lows, lower swing highs, so there's a lot of risk involved to looking for potential entries at these levels at this stage. But if you just patiently wait market to maybe to turn to the upside, and then you see an impulsive rise, and if at any given point we see an impulse back above 5875, then of course this will be confirmation that we are bottoming. So if someone is looking for potential trades like myself, of course, I want to see this kind of a reaction. Till then, I want to stay aside, so no harm done if the price will keep moving to the downside. So that's something that it's very important. It's not just analysis, it's of course the market confirmation that I am on the right track, because I definitely realize that I can be wrong and I should maybe adjust the wave count at some point. But when I'm looking for potential trade setups, I want to look for identify supports. I want to do an intermarket analysis like I did, and of course then what's the most important, that the market confirms that I'm on the right track. So if I will see an impulsive reaction from these levels, then of course we may look for potential entries. Now maybe at this point I can also look at this chart. Okay, so basically what we are seeing here is the S&P 500 compared to the dollar, US yields, and crude oil that we discussed also earlier. And if we really are going to see some stabilization, maybe even just a small one here on the S&P 500, on stocks in general, then of course dollar, which for now is in a very strong decline, should continue even lower. Okay, so my whole view is, of course, I will and I still am looking for potential opportunities on to short the US dollar, okay, because we have a pretty strong indications that dollar could continue to weaken. But on stocks, which for now it holds the positive correlation with the dollar, the picture there is a little bit different. There we still don't have a confirmation that the low is in. So hope this makes sense. Now, here's also maybe another thing, the S&P 500, since I've been talking about this one, watch at seasonality. As you know, we are right here in the mid-March, okay? And seasonality shows that from February highs to mid-March, we are in a pullback. That's basically exactly what's happening right now. So once again, this chart suggests that we could recover, and again, it shows us that maybe it's not the best time to look for potential strong sell-off from this point. I just think that these cycles could turn around and we can basically start trading higher for spring here. Now let's take a look also on Bitcoin. As you know, Bitcoin is in a pullback. Of course, that's because that's because we are still seeing stock market moving to the downside, but we are basically still in this very important zone. We really are not breaking down some key levels, but if we start breaking and falling below 70,000, I just think that cryptos will, or Bitcoin in general, will stay in consolidation for a longer period. But I still think that there will be some relief rally. Now, what's important maybe for the next few days is just to wait and see how the market will respond. If we start breaking this level around 78,000, what will happen down there around 73? Okay, keep in mind that this is still very overlapping drop. I know it's frustrating, okay, but it really, in Elliott wave terms, it perfectly fits to be WXY ongoing correction. But I'm saying ongoing, that we are still missing maybe this final push to the downside. So 73, 74, I just think that this would be quite interesting level for potential stabilization. So if we can stabilize down there, at the same time with a potential rebound on stocks, while the dollar keeps moving to the downside, then maybe we could have some very interesting and maybe short-term bullish patterns on cryptocurrencies. But overall, for now, it's just a neutral zone, and with the potential, with a higher probability to see a break to the downside and then a reversal higher a bit later, maybe in the second half of this week. Also, if we take a look maybe on the Ethereum, this one is having a potential wedge formation here. So we could be either trying to finish an extended wave C or ideally wave 3, but what this pattern suggests, because the market is not in that strong decline anymore compared to the previous very sharp fall like here, well, this makes me think that even this one could have some very interesting support around 2000 down to 1800. So this one maybe could be on my first list if we see some recovery from a new lows and even break out of this ending diagonal or wedge formation if you wish. Then of course this could be some indication that that the bottom is in and some very interesting opportunities could occur here as well. Now also regarding Bitcoin, if you look at unrealized losses, you can see that we are spiking to the levels that we have seen. Here back in September 2024, August of that same year, and July. Okay, now we are again here, and we know how market reacted back then. So basically this means that whenever we see these unrealized losses moving higher, it means that there are a lot of traders trading negatively, and of course this means that there's a lot of fear involved and a lot of sentiment that shows that we could be approaching some potential support. So I think that this again, it's coming quite nicely together with the potential supports. If we see, let's say, the final liquidations towards 73,000 level and then a rebound, then I think that would be quite interesting to see and expect some stabilization there on the crypto field. Now, let's take a look also on some of the stocks. As you know, stock market is already open because, as I said earlier, the US had moved hour yesterday. We will do so in 2 weeks here in Europe. So looking at Nvidia, it's definitely in a very strong fall right now, but still could be some kind of a consolidation here, especially if we compare the cycles here from 2021 to 2022. Maybe this is something that is going on right now here on this wave 4. Wave 4, as you know, whenever we have wave B moving to new highs, could have a very complex structure, could be a triangle, could be a flat. So what's really important right now that I don't see this pattern completed yet, but there can be some support here around 100 level. It's a round figure. It's also the 78.6% of this wave B and also this swing low from September of last year. So watch out what will happen at these levels, but I would keep my hands away from this market because I just realized that we are in the period of consolidation. If we take a look also maybe on MicroStrategy as well here, this one also still in consolidation. Okay, here I'm looking at log scale because you know this one is very volatile, so log scale will help you to identify the waves and cycles much more appropriate. So here we are looking still at the wave 4 in this flag pattern, not really bottoming maybe yet, but we have seen some very nice interesting rebound last week, but can't say for sure that we completed this correction, especially not because we are here still trading within this downtrend channel. But overall it looks like that could be a corrective price action, and whenever this one will maybe start turning around once again, of course it should have a positive impact on cryptos. If we take a look on Coinbase, this one has came back into this area. As you know, I'm looking at these gaps as a very important ones, and maybe if we try to identify some of the wave structure on the smaller time frames here, or if at least if we zoom this in, notice that we can now count potentially 5 waves down here. Maybe the 5th wave, the final leg down for wave C, or wave 3 is coming in play right now, trying to maybe stabilize around these unfilled gaps, because here there were a lot of orders that were unfilled, and maybe if these orders are going to be executed now because the whole prices moved back into this area, of course market could change the flow. So even if just temporary, maybe we will try to stabilize and complete this 5 waves down, either for wave 3 or wave C. So maybe some rally here could help to stabilize also the cryptocurrencies. Let me take a look also on maybe on Tesla and Microsoft. Tesla, in my opinion, is, as I said already last time, it's in a very big correction, and this correction will not be over just yet, because notice that we are now falling very sharply back into this triangle pivot area, back into this range. So we are most likely in the middle of this higher degree wave 4 consolidation, and we basically expect much more weakness, or at least sideways price action for the next few months. And I just don't see any kind of real opportunities on this one. I just think that it's better to be prepared and wait on a much lower prices if you're looking for some to put something in Tesla here. I just think that much better levels are yet to come here. Maybe final one that it's on my list here, it's Microsoft. Microsoft, at least here on the smaller time frame, no, that's daily, this one shows that potentially we could be moving into the final stages here of this wave C. Maybe if we look at the substructures, not really completing them yet. Okay, so maybe still have some room for this correction to unfold, but overall watch what will happen down there around 3063. I would say it was the swing low here back from December of 2023, and that's where obviously wave C equals to wave A. So in that area could be quite interesting to see maybe some stabilization. If Tesla going down for a long time to make wave 4, can S&P make new all-time high without Tesla? Well, actually Tesla is technology, is in the technology sector. So yeah, I mean, it's a good question, but I think the Tesla, because of single stocks, and we know it's a much more volatile, like the S&P 500, which is the basket of 500 companies. So I think that even if Tesla will make just some kind of a relief rally, the S&P 500 could be basically very close to its all-time highs. So basically my answer, yes, it's definitely possible whenever we get a bounce. Can you please say some words about emerging markets? Good question. Okay, so on emerging markets in general, what we are seeing here is a leading diagonal from that low from October 2022. So I think that emerging markets have basically room for more upside, since we are tracking some higher degree triangle here. Let me just clear this mess. So maybe we are in a higher degree triangle and looking for a wave C to the upside for wave D, and this obviously it means that the dollar could continue to the downside. We know what's the correlation between emerging markets and the US dollar, and this so far looks like a perfect case. If the dollar will continue to weaken, if the US yields, or if the yields in the US will be falling, that money can be flowing out of the US, and potentially emerging markets could be much more attractive. Whoa, we have Domen here. Hey Domen. he's asking for silver. Basically, I adjusted the wave count a little bit on silver, and at least in the short term, I just would not be surprised to see silver a bit more upside. We have seen a pretty nice rebound on silver, and because last week the prices were trading quite stable or above 32, I just think that we are now in consolidation, and at least one more push to the upside could be seen. I'm looking for levels to around 34, which in my opinion could be very strong and important resistance. We will see how metals in general will respond at that level, especially if at the same time gold will be trading around their all-time high. So in the short term, I just think that silver also, same like I've been discussing with gold earlier, this could be some intraday consolidation, and that we could see a bit more gains. But overall, if we just take a look maybe on a higher time frame chart, I just think that silver could be trapped in the middle of a very big consolidation, and for this year, very strong resistance is around $36 to $40. I just think that if we see another push suddenly into that area, watch out for potential reversals. I'm not in the camp where I would say that silver will go straight towards 50 or so from here. Simply put, because here through 2021 to 2023, we basically had this triangle, okay? And we know what means whenever you have a triangle in the middle of a recovery, normally it puts the final leg thrust out of a triangle. So that's why I'm thinking that we should be very careful up there in this resistance area. But as I said, in the short term, I think that prices are favoring more upside towards 33.50 or 34 area. Okay, traders, that's it for today. I can see some more questions here, but maybe we will you will get your answers in our webinar next Monday. So hope you enjoyed the content. Once again, please press a like, make sure to subscribe to our YouTube channel, and hope to see you again next week, same time. Traders, good luck this week. Bye.